Today, I'll be teaching you guys the most powerful strategy in ICT concept, which is optimal trade entry. Now, the only problem most guys has is that they consider optimal trade entry to be something like this, a simple entry pattern with an impulse swing with Fibonacci, not knowing that optimal trade entry is more than that, all right? Because definitely what I'm going to show you guys today is something that most of you have not been used to, okay? Because we'll be using optimal trade entry to frame top-down analysis. It's like a complete trading model that you can basically, that is the only thing you do. And by the end of this video, some of you may even need to change your trading strategy to just using this simple strategy that work. You can use optimal trading to frame your top-down analysis, to frame your directional bias. You can use it to do institutional, to determine the institutional order flow. And one of the most difficult thing in ICT that most guys encounter is this number 2 and number 3. All right, framing their directional bias and institutional order flow. Now, with this optimal trade entry techniques I'm giving you guys today, this is going to be very easy. Guys, to determine market structure, trade execution, very important on lower time frame. Then with this trade execution, we're going to combine number 5 and number 7, which is confirmation patterns on optimal trade entry. So we use it for entry and exit, and then we can use it for money management. So it goes beyond this simple diagram you are seeing here. It's not just only used for entry. We are going to break it down step by step, and I'm sure this video is going to be very useful to you guys. But before I go further, I want to, because there are some new guys that will be watching this concept and they are not used to optimal trade entry. So I would like to introduce optimal trade entry, like just a very, very quick introduction, and then we'll go straight to what we have today. All right. So if you watch what I have on my diagram here, first of all, to start off with optimal trade entry, this is the bullish side, this is the bearish side. Then OTE is just a composition of two impulse swings, just that one is embedded in the other. Okay, we can call it a range. You can see I said this is an impulse swing with a range. Why is it a range? Because there's another swing embedded on this bigger impulse swing. So this is just an impulse swing, right? So then if you watch this where I drew the Fibonacci from this low to this high, I'll show you guys how to identify this range on the chart. Okay, when we get to example. All right, so this is where I drew it from the low to this high, and then this is just a typical a range with Fibonacci. All right, so anything above the range, for example, this a range indicating premium and discount. So anything above the 50% level, the 50% level is the equilibrium level. Then anything above the 50% level is the premium level, and then the discount level. This is for the bullish market environment. Then the same thing for bearish market environment and impulse swing and all that. So what the most important thing is ability to identify the range. So to start with, I'm going to start with top-down analysis, frame our directional bias, institutional order flow. Now, the most important part I want to pay much attention and I want you guys to take home is so that this thing can just be your general trading model without going through any other tool. I'll still show you guys how to blend it with other ICT concepts like BDRs, other block, favor lookup. Those ones are additional confidence, but this is the main thing is everything I've written down here. Okay, so frame our directional bias, institutional order flow, market structure. This is the first four I want to just talk about is in just less than 5 minutes. I should be through with it and make it simple for you guys to understand. Then I want to spend a lot of time on this from number 5 to number 7, and then probably number 8. Okay, so first of all, we'll start with the top-down analysis approach. All right, so remember I told you guys the first thing you need to identify in optimal trade entry is what? The range. The range is the most important part. Okay, so how to identify a range is very, very simple. Okay, let me show you guys how to identify a range. All right, whenever you see the market structure environment, price going pushing to the higher highs, higher low, something like that. I wrote here this is bullish market structure composed of multiple OTEs, that is multiple optimal trade entry. A bearish market structure composed of multiple OTEs, that is multiple bearish uh, multiple optimal trade entries. So how do we identify the range? Because the range is the optimal trade entry. Then what I do is take my vertical line, then place them on each break of structure. Like this is a break of structure here. So this is just a physical way to identify the ranges. All right, this is just how to identify the ranges. Okay, so we can see we have like 3 or 4 ranges here. We have this first one. Okay, this you can see put something like this here if you want. All right, so if you watch, this is just example of something like this. I just showed you here. Example of something like this. If you drag this diagram here, you see that this is just example. All right, so here is just an impulse with a retracement into the range, an impulse, the retracement to the range, an impulse with the retracement. So what you do is, now that you know how to identify the range, you don't pay attention to all the ranges that have occurred in the past, all right? You don't look at all the ranges. So what you do is mark the most recent range. All right, you mark the most recent range because I'm building a foundation how we can start going to all these market structure and all that. You understand? And top down, actually top down analysis. Okay, so you mark the most recent range. All right, so this is the most recent range. You don't consider the rest because the rest price is done with the rest. This is where price is now. Okay, so it could be in this expansion phase or definitely then for bearish scenario, you can just easily identify here the last break of structure. That is where you identify when I define a range. Okay, so I want to walk you guys down from top down analysis to from higher time frame to lower time frame. That is, we're going to start with top down analysis dealing with optimal trade entry. Definitely, I don't know if you guys have watched my top down analysis video I've done in this channel, but let me repeat some of those things I just said. But I'll put the link on the description section of this video. So the first thing you identify on higher time frame is the most recent range, which I just showed you guys. Okay, let's assume this is higher time frame market structure. Okay, your first goal is to identify the market structure, either higher time frame or lower time frame. So we are on higher time frame now. We want to go from daily. Okay, let's go from monthly, weekly, daily, right? Then from daily, we can go straight to 1 hour and then 15 minutes for our entries. Okay, then here we just identify the range. Okay, so this range at this point is bullish. Okay, so we pay attention to the most recent price action. This is the range bullish. So let's assume this is on monthly time frame. Okay, let's assume on monthly time frame. I've done a comprehensive video on market structure and top down analysis. So let's assume this is done on monthly time frame. So monthly time frame, this is going to be bullish, right? This is going to be bullish on monthly time frame. Then weekly, let's assume weekly is bearish. Okay, if you watch everything I'm showing you guys now is just optimal trade entries, optimal trade entries. Remember, I've not put the Fibonacci level. Okay, we'll go to do that later. All right. So everything I'm just showing you guys optimal trade entry. So this is the most recent range from higher time frame to sorry, this is the most recent range on higher time frame, bullish, bearish. So this is monthly, this is weekly. All right. So next thing we're going to do is we'll focus on daily. Okay. So what could daily be doing? I'm going to go example to the chart. I'll show you guys on the chart. I'm just giving an abstract explanation. When we go to the chart will determine how we see this range, how we interpret it. Just like let's assume monthly daily is also bullish. All right. So what that actually means is that since monthly is bullish, weekly is bearish, daily is bullish, we are going to pay attention to the most recent out of these three price action. We're going to pay attention to daily because daily price action will unfold first before weekly will unfold, then before monthly price action will unfold. What that actually means is that this month daily price action, bullish price action, there's every tendency for price to still continue pushing to the upside. Then once price continue pushing to the upside, meaning this weekly price action that is bearish, there is every possibility for price to break structure to the upside because definitely it will still come down to monthly time frame because monthly time frame is already bullish if you watch. Okay, monthly time frame has bullish structure. So if daily continues its bullishness to the upside, then weekly is already broken market structure here, then monthly will keep pushing to the upside. So we just have to interpret it, know what monthly is saying, the latest range on monthly time frame, on weekly, and then on daily. When we get to the chart, the part of the chart, we're going to see this thing unfolding. All right. So I just have to start with that top-down analysis with optimal trade entry. Okay, so now that we are done with that top-down analysis, next thing we do is frame our directional bias. Okay, I just framed our directional bias. Okay, because from that daily perspective, I just showed you guys directional bias and institutional order flow is what okay, this number 1 to 4 is what I will take to my next explanation. Okay, so from that simple as analogy I just gave you guys, you can see I just frame my directional bias on daily, on weekly, on monthly. Daily is bullish, weekly bearish, but now bright price has broken to the upside, which is bullish, and then monthly has been bullish. All right. So we just frame my directional bias. Then next is market structure. Market structure, like I told you guys, we derive this latest this recent price ranges from market structure. So I think market structure is the first thing I explained to you guys. When you place your lines here, place your vertical lines here, you are cutting the ranges piece by piece. But a collection of all these ranges is what give back to market structure. All right. So now that we have already identified market structure, that's from number 1 to 4 of that list. Next thing we are going to, because I'm going to show you guys example, right? So I'm just kind of rushing the explanation so that when we get to the example part, you guys will see it clearly and very, very, very easy for you guys to understand. So next is we're going to consider trade execution, entry analysis. So these 5, 6, 7, I'm going to combine them together. But first, I want to start with number 7, all right? Before with number 7, I can be able to talk about number 5 and number 6. All right. So let's just take a typical example. Let's assume this is a range on 1 hour time frame. Okay, this is a range because our entries must definitely be on 1 hour 30 minutes time frame. All right. So let's assume this is the range. Okay, or let me say a new range has been created. We are in a bullish environment. All right. So definitely you have to start measuring your Fibonacci at this level from this point. Okay, you start measuring your Fibonacci from this point. Well, remember, I didn't talk about Fibonacci when we are dealing with these ranges on higher time frame, but definitely they are all the same thing. Okay, just have to add a Fibonacci here, Fibonacci at this point to know when it's on discount or premium level. All right, and I'm sure you guys will be able to identify that. All right, so now as price has expanded to the upside, we draw our Fibonacci level. The next thing is for us to start monitoring price action as price is coming down into this range. Now, the problem most guys face is that they were expecting price to come down to this origin, for price to expand to the upside, or to continue pushing to the upside, or for price to, sometimes price does not necessarily has to come to the discount price action. Price could just use 50% or even above 50% and expand to the upside. Now, how are we going to capitalize on this move, irrespective of where price want to use, irrespective of the PDRA price want to use on this range? Now, that's what I want to show you guys. We're going to use optimal trade entry confirmation pattern on any of these PDRAs or anything that has to do with this impulse swing. That confirmation pattern is what's going to help us to indicate that price is ready to pick up. All right. So what I just said is that we are going to make use of optimum trade entry confirmation pattern as price is trading back into this range, either at this discount level or at this premium level. We're going to make use of that confirmation pattern to enable us to know that price is ready to start expanding to resume this additional order flow to the upside. Otherwise, you guys will just be waiting for price to come to this order block, this origin. Price will not come to it, or you are waiting for price to come to this 50% or whatever, and price may even use above 50% and expand to the upside. So these are the things that's going to help you to avoid irrelevant losses or missing of trade or missing of move. All right. So now, as we are about to get started to it, what I want you guys to do is that for those of you who have not subscribed to this channel, please subscribe to this channel and make sure you turn up your notification button. Okay. So don't forget to like this video, guys. So let's get started. So as price is coming down to this, now I want to make use of a scenario whereby price have to come down to the discount level. So as price is dropping down to the, before even reaching the 50%, what I'm basically looking for is going down to 5 minutes time frame or 3 minutes time frame. If you watch my chart, I have 3 minutes and 5 minutes time frame because I make use of them for confirmation patterns. All right. So I have to go down to these lower time frames. All right. Immediately I go down to this lower time frame, I am equally monitoring the market structure on this lower time frame. All right. Equally monitoring the market structure on this lower time frame as price is coming. Remember, what is optimal trade entry? You pick the latest range. So immediately price break to the upside. Immediately there's a break in market structure on 5 minutes. You can see this could be 5 minutes structure. If I turn the color to, let's just turn it to red. Immediately there's a break in market structure at this level. So I know that price is not definitely going to come to the origin or whatever PTR that is here. Then what I'm waiting for next is price to definitely come back to either 50% or to this breaker block. Then I take my entry. This is how I capitalize on optimal trading. If you watch now, I've used optimal trading to do almost everything because it has to do with the range. It's not just about picking your trade at 50% or below 50%. So I've done my work right here now. I take my entry. I don't have to wait for price to come lower. And I will show you guys campus example. This is what price do. They don't even have to come down to this discount level. But perhaps this thing could also take place at discount level, right? This thing could also take place at discount level where price, you just have to You just have to know how to read this thing on lower time frame or higher time frame. So this is now our confirmation pattern. This is our entry. Everything done with optimal trade entry. We can enter either from any. So after this break of market structure on lower time frame, we can take the trade either from the breaker block or from the SCT fair value card that will be created there. So irrespective of the PDRs, just take the entry. If you still want to fine tune it on 1 minute, that is your business. But mine is just do it on 5 minutes, 3 minutes, and then place my trade, and then we are in for the move. All right. So we have talked about entry. Then let's talk about exit. Now, when price break above a range, for example, this is a continuation of a move, continuation of a move. Now, this is where we are taking our entry. Make the price break above this range. I'm not exiting my trade at this level. All right. So as immediately price break above this level, then I switch to lower time frame, 5 minutes time frame, to make sure I'm monitoring price as price is pushing to the upside, because there's definitely going to be minor micro market structural movement to the upside as price is pushing to the upside. Then immediately there's a break in market structure on lower time frame, then I know that okay, this could lead to retracement or trade back into this expansion range. Remember, this is lower time frame. All right, let me change it to white. This is 1 hour time frame. This is 5 minutes time frame. Then price just broke, and then this could be our indication for possible retracement. So we just finished everything I just explained. Look, I don't want to waste much of your time, guys. I just want to save your time and then show you guys how powerful this technique is. You see, frame top-down analysis, we just did that. Directional bias, we just did that. Institutional order flow, we just did that. Market structure, we just did that. Now trade execution and entry and exit confirmation pattern. That's where we started from the entry. So next is money management. Now, before I talk about money management, I want to go to the chart and show you guys example how this thing is done, so that you can just see it instrumentally how this thing is done. So right now we go to Euro USD chart and then show you guys example. All right, stay tuned, guys. So looking at the example on Euro USD, you can see from the current price action, you see that we have a push from this low to this high. Now, if you look at the previous market structural environments, you can see I'm on daily time frame. Now, I'm just want to show you guys how to identify the range with this one time frame. Then you can see use the same thing to interpret for weekly or monthly. Maybe perhaps I have enough time, I'll go do that. Okay. So for now, if you watch this, the market structure on higher time frame, okay, from this level to this point to this level, I'm going to make it. I'm going to change the color when I'm done drawing it. All right. So this is the market structure on. You can see the drawing from this to this point. This is correct market structure of price push to the upside now. So after the drawing, the question now is how do you identify the recent range of price action? If you watch, price just pushed to the upside and then we made a lower push to the downside up to this level. Then this is the current range price is. All right. So we are expecting for what probably a resumption to the upside. That is one possibility. Price can still come down to take out this equal lows here, but that is not what we are dealing on this tutorial. So we're just talking about how to identify the range. So if I was to identify this range, the first thing I'm going to do is take my vertical line, place it at this level, okay, at this point. Remember, not at this point. At this point, this is where I'll place my vertical line. So every other thing from this point to the downside, I'm going to discard it. So I'm going to ignore every other thing from this from this point to the left hand side, and then focus on only at this place. So this is my current price action I'm working on. I'm working with. All right. So from this, you can easily interpret that this is bullish. So we can easily interpret that this is bullish. Now, since this is bullish, what we just need to do is go to lower time frame. Definitely, we can interpret for weekly, but I've done weekly analysis before. Weekly is still bullish, and then monthly is bearish. Okay, monthly is bearish, but that's what I'm focusing on currently. So go to 1 hour time frame. I want to show you guys example on 1 hour time frame. So on 1 hour time frame, what I want to show you guys is how to use that confirmation pattern I just showed you guys during the explanation. All right. So let me use the current price action, because definitely if anything you are teaching somebody and is aligning with recent price action, that means that is 100% accurate, or let's say 90 something percent true. Okay. So long as aligning with recent price action, there is a chances of it being true is very, very high. So I'm not trying to paint or come up with irrelevant information here. So this is recent price action. If I to take my Fibonacci from this level, from this low to this high. Okay, you can see price just traded to the downside. This London session today, price traded to the downside. Now, if you watch, a lot of people will be like, if you look at this price action, you agree with me that a lot of traders will be expecting price to probably come to this other block because this is the origin of the move. All right. So let me take off this indicator. So probably come to this other block so that they can take the trade. Or you can see what price is doing now. Price is going to come to this other block. So what we're just going to do is look at this place. Let's see if there is what I showed you guys. If there is at least a market structure shift on lower time frame now, this is what we're going to do as using as our automated entry on lower time frame. So we'll go to 5 minutes time frame. Okay, 5 minutes time frame. We'll look at the price action on 5 minutes time frame. So price traded to the downside, definitely fine. We are looking at this area. So immediately as price broke, definitely there's definitely going to be a break in market structure. All right. Immediately price broke to the upside. All right. Immediately price broke to the upside. You can see what price is doing. Then it retraces back into the breakup block. This is the ICT breakup block that you should reference. Okay, this is the ICT breakup block that you should reference. So immediately there is a break to the upside, price come back to the breakup block. What did I tell you guys? Immediately price come back to the other block, breakup block. Either you get into the trade or you wait for. I don't know if you still want to fighting it on lower time for like 1 minute, but I don't usually wait for that. I get on the trade. You can see price has been respecting. This is recent price action. So what if we go to other price action? Let me give you guys another example. Let me use this price action here. Okay, this is very scenario. So price ought to use this other block, but they didn't use the other block because price didn't get to that level. All right, so if you go to 5 minutes and you're gonna see it, price broke to the downside at this point and started trading. I took this trade on I think Wednesday last week. So I took this sell on Wednesday last week. Same thing for this level here. Price didn't get to the origin. You can see this is the origin. I did analysis. I posted it on my Telegram channel that price may come to this. So I know that definitely it's going to be very more difficult for me to take a trade at this level. So I just have to do it to satisfy a lot of guys on that channel. But basically, what I do is I work with lower time frame, optimal trade entry. Once price show me a sign that okay, let's look at this level here, this point of interest here. So let's go to lower time frame. Today is that day is Friday 28th. So Friday 28th, lower time frame. So this was the first push to the upside. So immediately price broke this level, then the selling will be confirmed. So price broke it down somewhere here and here. That's if you want to really wait for a confirmation. All right, price broke it down. But there are still some guys that do use confirmation on 3 minutes time frame. If you go lower on 3 minutes time frame, you see that you guys did take a trade at this point. But I just like to use a 5 minutes time frame. But let's see if we can catch that trade on 3 minutes time frame. So after this push, this is a failure swing, and there was a break to the downside, and then price traded back to this mitigation block. Okay, and then you can take it from this level. So you just like that, guys. So go and start practicing it. And those of you that have not subscribed to this channel, please do not forget to subscribe and turn on your notification button. Like this period, I'm going to make sure I keep posting updates for you guys almost every day for you guys to start learning. I'm going to try my best to keep up with that to make sure I post video daily. All right, see you guys in the next upload.